I really don't understand why nobody else is talking about this. It's going on for 3 months and it really impacts the markets. What we're seeing here is the stablecoin market cap in crypto relative to the US money supply. Over the last 3 months, we have seen extremely slow growth, only 0.6%. Compound that over the year and we get a bit over 2% annual growth. This is not typical for a bull market. Usually during a bull market we see very steep inflows. We see a lot of stablecoin creation. Because what does it actually mean when this line is going up? It means that people are depositing their hard-earned fiat currency into the crypto ecosystem. If you are sending your money to Binance in order to then use stablecoins to purchase various altcoins, what you're actually doing is you're sending the funds over. Binance takes those funds, sends them over to a stablecoin custodian. The stablecoin custodian holds the funds in a bank account and then, because the funds are held, issues stablecoins on the blockchain. So the stablecoin issuer just makes money with the return, right? The stablecoin issuer deposits this maybe into government bonds and then just issues the US dollars. We can see the issuance of the US dollars, the minting of the stablecoins in this chart. And when nobody is depositing money into crypto anymore, then how can prices sustainably go up? Now, what's interesting about this chart is that it has very little volatility. It has very clear trends. Now, it doesn't always go up. We have seen periods where the stablecoin market cap went down. In other words, there were more people withdrawing from the crypto ecosystem than depositing into it. This here is May of 2022. That's when the Terra Luna protocol collapsed. So that's when the UST stablecoin depegged. During that bear market, FTX also went belly up. But then by the end of 2022, or latest by October of 2023, money is coming into the ecosystem again. Now we can have a look at the details, right? This is the kind of different stablecoins that are in circulation. It looks like the balance isn't really changing that much over time anymore, as in no stablecoin is dominating the entire market. It seems like the market has been somewhat equally split, but really there is an impact regarding the capital flows that come into the space and of course crypto prices. If there's more dollars chasing the same amount of Bitcoin, for example, and of course the Bitcoin price long term has to go up. So that's what we've seen in the past, right? When we saw inflows, we tended to see Bitcoin going up. When we saw outflows, we tended to see Bitcoin going down. And if we don't see any stablecoin growth anymore going forward, how can we really reach the 200k, 300k, 400k in Bitcoin? It will not happen. We will still see our medium-term rallies. We will still see volatility. But are we going to see massive new all-time highs without new money flowing in? I'm not so sure. There is a strong correlation between the capital rotation into Bitcoin and the capital rotation into stablecoins. Only when there's money coming into the space do we see appreciation of the Bitcoin price. And so I find it very fascinating that nobody else is talking about this. The stablecoin market cap has been completely flat for 3 months, and I do think this is extremely important. There's too much focus on metrics that don't really matter. For example, the ETF flows, right? Are currently people still buying Bitcoin via the ETFs, or are they rather selling? While the existence of ETFs is great because long term there's more acquisition than selling, so this is a positive impact on Bitcoin's price long term, the medium term movements don't really matter, because have a look at the ETF change versus the long term holder change. The long term holders are really what's driving whether or not a correction stops. So this is when the long-term holders bought, or whether or not a rally can or cannot continue. This is when the long-term holders sold, and that's when the rally stopped. Luckily, recently, the long-term holders aren't doing anything. They're not buying, they're not selling. Of course, if they were buying, that would be positive. But at least we don't see the massive selling pressure anymore that we experienced since Bitcoin hit 110k roughly. The recent recovery that started at 85k to the current prices was pretty much just the short-term holders buying. The issue is that the short-term holders are very close to their average cost basis. In other words, the current price tends to oscillate around the short-term holder cost basis. There's less selling by the short-term holders when we are below. There's potential profit taking when we are above. And currently the short-term holders are pretty much balanced. They're not in profit, not in losses. And the overarching trend, right, if we are going up or down in this overarching trend, that's long-term holder decision based and capital flow based, right? How much money comes into the system. If there is no more money coming into the system, then why would the short-term holder cost basis long-term go up? Why would we simply not just oscillate around that cost basis? There is one potential positive case to be made here. And that's the stablecoin dominance. A lot of money is currently on the sidelines, and there is negative correlation between crypto prices and stablecoin dominance. When a lot of money is on the sidelines, we tend to be rather cheap in Bitcoin. When a lot of the money has already been deployed and the stablecoin dominance is only at 5%, we tend to be high in Bitcoin. Currently, we tend to be rather low in Bitcoin. There is a lot of capital on the sidelines that could get deployed, but we do need to get the positive narrative. We do need to get something that makes everybody excited to risk that capital again. Don't get me wrong. Right now, I am cautiously optimistic. We are above what historically has been the best moving average. So that's the 44-day simple moving average in Bitcoin. And as long as we are above, I tend to bet on rising prices. I've backtested all moving averages from the 2-day to the 200-day. The 44-day simple moving average tended to work the best, and it tends to do much, much better than just buying and holding Bitcoin. Right? Buying and holding Bitcoin is here in white, and the backtest is the line in purple. And while this is just theory, I'm acting on this practically as well. We opened an automated copy trading vault. So that was at the beginning of October of 2025. If you just bought and held Bitcoin during that time, you lost 22%, but because we followed that moving average, we are up roughly 10%. So that's 30% of alpha in the span of just 3 months. That's even more than what the backtest suggests, which gives us an annualized alpha of 115% of our buying and holding Bitcoin. So every year on average, we more than double the Bitcoin stack. And 32% alpha over 3 months is more than 115%. To be more exact, it's more than 200% per annum of additional alpha. So currently we are doing better than expected. And of course, I'm very grateful for that. But in the end, it's really just the long term that matters. I do not think that just buying and holding crypto is the very best approach, especially given that the volatility is that massive, right? Bitcoin can fall by more than 70% during a bear market. And we've got a lot of data as well. And we should take advantage of that data. If no money is coming into the space, if there's even outflows, why be so optimistic about crypto prices? I don't understand. We want to be invested when the market is expanding. And that's the important thing here. We have to see new inflows again. 0.6% of stablecoin market cap growth over the course of 3 months is not enough. And the reason it's not enough is because we have all of that volatility in crypto, right? So crypto is a risk on asset, and that additional risk needs to get compensated with performance. If you have very little extra performance, all that volatility is not worth it, and that's when crypto prices tend to rather go down. By the way, if you're interested in following the 44-day simple moving average in Bitcoin as well, you can either do the trades yourself, right? You can manually just execute, look at the price once a day, or you can set this up via automated trading. More of this is explained in the premium membership. There are also tons of tutorials that help to up your crypto game to then generate some alpha. I've been beating Bitcoin for the last 8 years, and I hope to beat it even more aggressively going forward. Again, just using data, not trying to be a magician and find the next 100x altcoin. That goes wrong more often than not. If you got some value out of this video, feel free to give this a like. Looking very much forward to seeing you again in YouTube or see you on premium as well. Cheers!